Welcome to Markets Tomorrow. The toil and the grind continues for Indian markets, which have plunged to a record low on strong volumes, and today we've cracked because of global reasons.
Absolutely, blame it on what you want, but it was disastrous. So let's talk about the road ahead on Markets Tomorrow, and joining in is Adrian Moat, Chief Emerging Markets and Asian Equity Strategist at JP Morgan, Jim Walker, Founder and Managing Director at Asianomics, and Ashwini Gujral, Fund Manager, ashwinigujral.com. Adrian, let's start off with you. What is your opinion of what the US Fed has done? Do you think that it is the perfect indication of global growth coming back? Because if US grows, everything else will grow.
That's correct. I mean, the US is the largest economy in the world. It is a consumption-driven economy, so it will import more, and we will be leveraged off that. The best places to be for that leverage are Korea, Taiwan, and Mexico, but India will also benefit, and India has the added benefit that as China slows, demand for commodities weaken, which improves India's terms of trade. I think it's going to turn out to be fundamentally a very attractive environment for the Indian equity market.
Ashwini, how bad is the technical setup looking? There is no point in arguing about the trend because the trend is weak. What I want to gather from you is that how much of more collateral damage is left?
The damage has just started. See, I'll explain you in very layman terminology. You have a spring, you keep on coiling it. If you coil it enough and then leave it, how do you think it moves? It moves with great force. The energy that is bottled in, tends to move in one direction. For the last 2 months, December and Jan, we were in this range of broadly, 6150, 6350 type of zone, give or take 50 points. And from that, we've come out with great force. Now, this kind of energy that market has built in will not get dissipated within 3 days. So chances are you may have, late day rallies or sometimes consolidation, etc. But there is much, much more downside. And, to take a broad target, the initial target is you had a range of 6,000 to 6,400. Once we broadly break 6,000, it's 400 points lower. So 56 should be your first target on the Nifty. And now, we know with crisis that they keep on developing with time. You can't say today what will happen 15 days from now or 30 days from now. What's clear is that something has started, and we've often seen in the past that what generally starts small generally tends to go bigger with time rather than smaller.
Varun, what's your opinion as to where we're headed from here? Because expectations were arrived that at least 6,100 would be held on to by the Jan expiry, but we clearly didn't, and banks also continue to suffer.
Well, my own sense is that it is unlikely that we fall sustainably below 6,000. I think definitely there is a short-term reaction both to RBI policy and what has happened in US yesterday. But I don't believe there is a lot of downside left in the market. The lot of high beta sectors like banking have already corrected quite a bit. There is definitely reason. We ourselves had turned quite constructive on banking a couple of months back. But looking at what the RBI governor said, it is unlikely that interest rates would come off anytime soon, and hence there is a reason to revisit the whole hypothesis on the banking space as a whole. But I don't see a lot of correction or a lot of downside still left from here. So my own sense is that market will probably be in a small range and look at both political and global cues in the times to come.
Well, you're having a glass half full approach, Varun. But the trend is so much against us that it's difficult to really have any kind of a positive approach in this kind of a market. Jim, I want to bring you in. Now, the top story today was what US Fed indicated and guided last night. Now, Fed has delivered on expected lines, but the world is still puzzled on what Fed could do. What do you make of today's sell-off in emerging markets?
Well, I think I'm not that puzzled about the US selling off. I think as the year goes on and the Fed keeps reducing the amount of purchases that they make every month, US equities are very vulnerable. At the same time, I must admit I'm slightly puzzled by what's going on in emerging markets, not in Argentina and Venezuela, and Turkey. These places really should have sold off long ago. But generally, I really don't think people need to be that worried about quantitative easing being tapered off if they live in the emerging market universe, because it's going to focus us back onto fundamentals, and the fundamentals in the emerging markets are actually still pretty positive. So this is a buying opportunity.
Let's speak about some of the earnings then. And Varun, what do you think will be the market reaction to Hero MotoCorp? Operationally, it wasn't a great set. The margins came in below expectations on account of the forex fluctuations and rising input costs.
Well, I think as far as the whole two-wheeler pack is concerned, there is reason to have some level of caution. I think volume growth has been a concern for quite some time, and it is going to be. There is no sign of any revival as far as consumption demand is concerned. So we believe that both Honda being so aggressive in this space and the fact that the demand remains extremely weak, there is reason to be careful on the two-wheeler space as a whole.
Adrian, your underlying thought is that this is a good time to buy into Indian stocks. So when do you think the big move will come for markets? Do you think it will only come after the outcome of elections?
No, I think the opposite is probably the case. The market has tended to move up on speculation of a change of government, the opposition doing better. So I suspect it's before the elections, not after the elections, that you must be buying this market.
Let's talk about some of the other big results for tomorrow. PNB is slated to come out with its numbers. NII is seen higher by 9.4%. We're expecting that the NIMs might just dip slightly, and that, of course, slippages will perhaps increase on a sequential basis. Apart from that, we also have IDFC putting out its numbers. Profits are seen higher by 2.8%, but a flattish quarter for the company. Ashwini, what would be your call on individual banking names, particularly the PSUs?
Well, on all rallies, you still need to go short on them. And, these things happens from here, but there is no question that there has been a clear sell signal, and it does not appear to be a correction. Corrections are mild, 20-30 points a day, correct for 5 days and then go back up. It does not go open gap down with 100 points, close at the lows of the day. This smells of something different.
Jim, in fact, some of the brokerages were working with the assumption that there would be a pre-election rally that we were going to see. What's your view on how we're likely to behave?
Well, we really never try and predict the political cycle anywhere. Obviously, this is a fairly significant election for India. But at the same time, in our view, if we just look at the economic fundamentals, where India has come from, the rapid slowdown in economic growth in the economy, the build-up of problems at the monetary level, those are being addressed. The slowdown, I think, is very close to over. And I think the corporate sector is in the process, if not quite there yet, of repairing balance sheets and then improving its profitability and its ability to to stabilise spending and then improve capital expenditure again come 2015. So all of that is aside from politics. To us, this is actually just the time in the cycle that you should be accumulating equities in a country that is going to bounce back to economic growth in the region of 5 to 7% over the course of the next 5 to 10 years.
Let's find out what exactly the dealing rooms are talking about in terms of individual stock recommendations. Pranay is here from our research team with the stocks. Pranay.
Well, Avan, Tata Motors is one top buy recommendation coming in from dealers apart from Oberoi Realty. Now, Tata Motors was revving up in a sliding market, and institutional desks are indicating a strong accumulation in this counter where the volumes were 3 times as high compared to yesterday. Also, reportedly, the company is the top contender for getting a 1,000 crore order to supply trucks to the Indian Army. Apart from that, also analysts are saying that the newly developed petrol engine is going to boost the sales of its compact cars and sedans, which will be unveiled in the next couple of weeks at the Auto Expo, and the premium car outlook also is looking very robust for its JLR brands. Clearly, the currency tailwind remains a margin booster for it, and that is why dealers see 10% upside in the near term for the stock, which was the top gainer on the BSE Auto Index. On the other side, Oberoi Realty, now we are getting the buzz that the company has received the environmental clearance for its Mulund project from the Supreme Court, which had been pending for over a year. This project will be developed over an area of 18 acres rather, and because of the company's low gearing and cash-rich balance sheet, apart also from the clear land bank title that it will have, which will get launched in this quarter, clearly we'll see revenue recognition coming in for that, and therefore dealers can clearly see the stock climbing over levels of 220 very soon.
Adrian, what is your take on IT and pharma? Because these are two sectors which clearly have been the real darlings of the market.
Look, I think you have to look at those sectors very specifically. Look, they're beneficiaries in terms of a weak rupee as exporters, but the IT story is maybe one that's more common across the companies. Within the pharma space in India, you've had some very poor performance. If you fail to get FDA approval for your factories, that's not very good for the story. So the other thing I'd highlight about Indian pharma, I often get asked about it, it's such a small part of the global benchmark that it isn't particularly relevant sort of advertising that you should be long Indian pharma stocks. So really it's the IT sector which is the largest sector in the Indian stock market, and we're very bullish on that. It plays well into our confidence in US growth. You get a full year of the rupee around the 62, 63 level. And I could see Indian IT continuing to have a very good year.
Ashwini, since you flagged off that this is just the start of a downside, what is it that you would be doing with individual stocks on the charts?
So individual stocks, to basically go short on all of the weak groups, banks, metals, telecom. So that should be the strategy. I don't think IT will save you. It may not go down a lot, but I don't think it should go up a lot either. So in a downtrend, you basically look at the short side.
Your top picks?
On stock calls, I think Titan is a buy with a stop of 215, target of 240. Bank of India is a sell with a stop of 197, target of 180. And OBC is a sell with a stop of 172, target of 155.
Jim, what are your top money making ideas for 2014?
Well, India is actually at the top of the list. We have 2 lists for our clients. We have our high conviction global strategy calls, and we have our regional relative calls. But our high conviction global positives are India at the top of the list, still long gold, and long ASEAN banks. So that includes banks in the Philippines, Malaysia, Singapore and Thailand, but not Indonesia. So these are our 3 big bull bets for this year.
And Varun, let's have the same question tossed to you. What is it that you would be looking at in terms of individual stocks?
Well, I think the telecom space has corrected quite a bit in the last 2-3 weeks. I think the operational results are pretty good. Most of the companies delivered margins which are in line with expectations. The ARPUs were pretty healthy. I think the overall consolidation story is playing out quite well despite fears of Reliance Jio coming out and being a very aggressive player. We believe that the telecom space has already seen its worst in terms of competitive intensity, and no player will probably behave that irrationally this time. So that is our top sectoral pick at this point of time.
Alright gentlemen, it's been a great power-packed show, so thanks very much for joining in and giving us your expert market opinion. Look forward to having you more often. But with that, it's goodbye from Nikunj and me. Thanks so much for watching.